So the very important thing before we are getting to the Q&A session is what does affect the interest rate. The interest rate is the very, very, very important thing. Of course, everybody wants to have the best, the cheapest, the lowest. And I would love for all of you guys to give you a 0 point interest rate if I would be the interest rate god, which unfortunately I am not. But in the end of the day, it's also a combo that will, and we, Eddie, me, and all other consultants of my company will try to do the best, because we do not get paid if we select a bank with a higher interest rate. We do not get paid more, or if we select a bank with a lower interest rate for you, we do not get paid less. In the end of the day, we don't care. We try to do the best because we do depend on doing a good job, on getting yourself a good deal, and get referred by you, because this is how the whole business and how the whole model works. And we have absolutely no intention in offering something bad. That's why our motivation is to get the deal done and closed for you with your satisfaction. And therefore, we are fighting for you. We are fighting for you to get the best rate of the bank. And how to get the best rate of the bank is also kind of, everything follows a common logic sense, kind of easily explained. So the very, very, very important thing, Eddie, what does the bank care about most and very most is
cash. Cash is king.
Cash is king, absolutely. The more you contribute from your own savings, the more you put in, gets you a better risk rating of the bank, and it's called loan to value, LTV, or again, the very, very long German word is Beleihungsauslauf. And this is the reflection of purchase price, how much the property does cost, and the loan amount that you need. And if the property price is, for example, 400,000 euros, and you want 400,000 euros, it is a full risk loan for the bank. And the banks hate risk. The banks don't like full risk loans. Therefore, there are some logical steps, not the same with all the banks, but more or less, also here, pre-information for you, more or less kind of simple to know and check. Every 5% of the property purchase price towards equity gets your rate better.
Like a stairway, basically, right?
Absolutely, like a stairway. And the very, very, very important part is to get at least 5 or recommendable 10% out of the property purchase price from your equity. So that means if you buy a property for 400,000, try to prioritize at least 40K additionally to the notar and tax costs and agent's cost if there are some agent on it. Additionally from your cash, so that we apply for you with a loan of 360,000 euros, because the first 10% are the highest on rate. Just to give you an example here, the current interest rate for a 100% loan is above 4. Let's call it 4.1. If we talk about a 90% loan, we sometimes can even get a 3.7. So we have 40 points.
Yeah.
That is an upcharge just because of the 10%. And unfortunately, and I know that question might come up, no, it is not possible to take a personal loan for this. It definitely needs to be cash. So it needs to be either some stock sellings or some cash that you have laying around on your account accumulated. It definitely needs to be cash. It is not allowed to have that from a separate loan and call it cash. So that's the first sweet spot. 90% loan is the first go-to loan. And then, of course, everything gets better. If you contribute 5% more, then the interest rates get better by 0.04. If you contribute another 5%, then the interest rate gets better by another 0.04, and so on and so on. So the very, very best rate, and this is the very bottom line that you can reach, is a 60% loan to value. It means roughly when we talk about a 400K loan and you're taking a 240,000 euro loan, there is no risk for the bank at all, and they give you the best interest rate. And that's the absolute lowest bottom line. The interest rate here is somewhere around, in the very best case, maybe 3.5, 3.6. It depends. It depends also on the flexibility that you would like to have, Eddie. The flexibility is something that the bank also sometimes, some banks likes to upcharge in rate and sometimes not.
Yes, when you look at, for example, additional payment options, you have a lot of banks charging a premium if you want 10% additional payment option. What does that mean? In your example, if you have a 400K loan, additional payment option of 10% would mean additional payment option of 40,000 every year, or 5%, 20,000 every year. This banks tend, almost all banks charge a premium for that. So if you say you don't need the flexibility, which in some cases it's maybe not necessary, you can save in this regard.